Hey guys, hopefully you're doing absolutely fantastic. Welcome to another exciting episode of Breaking Bitcoin Market Update. Of course, I'm your host, Justin Wise, lead analyst and co-founder of CrackingCryptocurrency.com. Today is Monday, November 11th, 2019, foul year of our Lord. And of course, hopefully you're doing great wherever you happen to be tuning in from today, whether you're watching from across the YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat in the comment section down below. We've got a fantastic show for you guys today. It's a very interesting day in the market. Got the live trades on the chart behind me as well. Got the studio all set up again for another week of live streaming and recording. We've got a lot of exciting stuff coming to you this week, so I'm really eager to talk about it and go over everything. But let's not waste any time. I want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And without any further ado, let's give away some crypto to a random commenter and a supporter of the channel. And let's break into the markets because that's what I want to talk about today in earnest. We're going to look at some higher time frames and we're going to go through the lower time frames today on all the majors, on ByBit and BitMEX as well. Look for daily opportunities and talk about our current positions. Let's get into it, guys. All right, so here we are in the live scene, of course, as we do, and we are going to pick a random commenter from Friday's video, which was Bitcoin plunging below 9K, trading update, VeChain delivering the beef. That was a good episode. Make sure you guys go check that out, especially the last half hour. We went over a whole lot of stuff and Europe's new Bitcoin plan. And honestly, if you take nothing else away, definitely go watch that portion where we talk about the danger that the ECB's plan poses to people who are advocates of privacy and security. Randomly picking a winner from the 13 commenters, and it was Midwest Attempts. Shout out to you, my friend. I got to spend a lot of time with you this weekend. It was a fantastic time. And he says, CC for life, baby. CC for life, baby. Indeed, baby. I don't know if I said baby too many times there, but thank you so much, my friend. I already know how to get a hold of you, so I will tip you some crypto, my friend. With that being said, into the live scene. All right, here we are in the live scene. Everything seems to be working well. Let's do the roll call. Let me give a shout out to all my good friends coming for today's show. We've got It's Hard, GBU Wally, Ben Kirkland. We've got Mastash. We've got Mr. Ether. We've got the Restream bot, as always, holding it down. Ken D, hopefully you're doing absolutely well this morning. All right, Dark Rico, Dan Eli, Danny L, my bad. Good to see you guys. He says, hey bro, good to see you. Good timing for a stream to get some insight from a pro. Well, thank you very much, my friend. Looking forward to it. And B-Flow over on DLive. Good to see you, man. Let's get into this. We have quite an interesting day. This is actually Ethereum that I have pulled up. So let me actually get over to the big dog, Bitcoin, and we will start there. Let's pull open the ByBit chart as we are wont to do. Actually, let's go to the Bitstamp chart so we can do actually do our regular analysis that we have kind of going on. All right, so let's talk about this. On the daily time frame, we have some interesting things happening. As I talked about, if you guys were watching on Friday, we went through the lower time frame analysis of Bitcoin's price movement on that day and talked about why the trade was not to short, And this was very good. This was very obvious to us in the group and as PTP traders because of the system that we trade. We got no full risk signal, not even a short risk signal on the daily time frame. So on this close, on this candle that opened up on the 8th of November, so this would have actually been the evening of the 7th and closed on the evening of the 8th, this candle would not have been telling you to go short. This candle would not have been telling you to go short. This candle would have opened on the evening of the 8th and closed on the evening of the 9th. That's how this candle would have gone. So on the 9th, when we last talked on Friday, this would not have been a signal to go short. Why? Although we did have everything, we had Minx confirming, CCI was not confirming at that time, and our volatility filter was not confirming. So there was no purpose, there was no reason to go short, as we talked about. We went through the lower time frames. We talked about, again, a concept that I talk about a lot on this channel and in my trading about how not to buy the first dip. Let's actually go back to that point in time, and we broke down this section of the chart right here when I talked about how we have a sharp move to the downside on pretty high volume, and then we have an immediate buyback. What does that let you know? That individuals are attempting to buy the short. This is also, of course, mixed in with individuals taking profit as well. But the The rise up to me indicates that individuals are buying the dip, buying back into the market, which is the wrong move. You never buy the first dip. If you're down on the 15-minute time frame, you do not buy the first dip. And of course, they were punished as price plummeted further to the downside and then put in those big volume spikes. You are looking for volume spikes. Where does volume come into the market? As I say over and over again, at the beginning and at the end of a trend. And this is where the volume came in, and this is where the trend ended. This is where the trend to the downside ended. Then, of course, we had sideways movement. We did have to wait quite a while for that Jericho candle, but it did come in the middle of the night like a thief, as it often does. Is this where you want to be when Jesus comes back? And punished the shorts, punished anybody who attempted to short this area, and then price ended up moving to the downside again, breaking through that lower level of support and coming down to this order block that I was interested in around the 85.5 area. What's actually interesting is here on the Bitstamp chart, I saw it more acutely on the BitMEX chart actually, but you can see it very clearly here. We can actually see the low of today's daily candle was at 85.93. And where did I talk about setting those limit orders on Friday? I talked about setting them at 8.55. $8,550 is where I talked about it previously. Now, before we get into that, before I get anybody screaming at me, let's go over where I actively am in the market. So as Bitcoin goes, I'm actually out of position at this point in time. I was out of my long before this movement to the downside. I closed my long over the weekend for a number of reasons. Not only because the sentiment from the analyst team was quite bearish, was quite negative, but also because objectively looking at the chart, looking at this discretionary trade that I had put on, which means I'm going to be following discretionary rules, I did decide that it was much easier to revert to my PTP system, which is my systems trading process that I go through every single day for 90 to 95% of all the trades that I put on, and are the grand reason why I'm able to be a consistently profitable trader, using my tools and following my rules, the rules that I've created through doing this for a very long time. And that I'm actively engaged. I have a hair on my keyboard and that's quite distracting. Sorry. And then that I'm actively engaged in teaching people on a daily basis. I was very grateful for that. I did not have to suffer in a full risk position to the downside with this movement down. So I am not in an active Bitcoin position at this point in time. Not in an active position at this point in time. And I'm quite grateful for that. And I think that's okay. Kind of one of the questions that I've gotten a lot this morning as I talked as we had our weekly team meeting this morning, and as I had a few short mentoring sessions with a few students prior to that and a little bit after that, was discretionarily, do I have a good bead on where Bitcoin's price is going to go? And often I do. At this point, I don't. I think there are things that we can look at, but if your system is not giving you a signal and you don't have a strong discretionary based reason for entering into a trade, well, then the best position is to stay flat, is to not be in the market. And the nice thing about, trading cryptocurrency is that we have many, many, many opportunities elsewhere. So I am in about eight or nine active, actually it's eight, it is eight active positions elsewhere, which are doing quite well. So overall up in good P&L for the month and for the week with my active trades. And that means I'm not reliant upon Bitcoin because PTP works on every asset on any time frame, anywhere you wish to apply it, which is good, because that allows us to have opportunity and to be actively trading when we're unclear about Bitcoin's direction. However, here are the things I am looking at for my next setup, okay? So because I did pull my long, I did actually end up pulling my long bid at 8.55. So let's actually go over to the ByBit chart and see if that would have even been germane. Let's see here. On the ByBit chart, we actually had a low of, again, 85.93 over here on the ByBit chart. So I wouldn't have gotten filled anyways. I'm kind of waiting to see, so not kind of, but what I actively am waiting to see is what is the reaction that we get off of this level. There is a possibility that I'm looking, so I am actively looking for a 2 or 4 hour setup to take price back up to the upside, which would allow me essentially to be well positioned to scale further into that position, basically with my profit taking, to enter into a 12 or a 24 hour setup on BTC USD to the upside. But I'm also prepared for further downside as well, looking at kind of the volume, looking at the rejection that we got. Again, it's kind of unclear at this point in time. If we go and look at let's pull up the 15-minute time frame and we can kind of see this play out. Again, just as I talked about on Friday, don't buy the first dip. The second dip was a good one to buy. The Jericho candle came, represented a good profit-taking opportunity for anybody that longed that consolidation range, the accumulation range down at the bottom. As we can see, it wasn't a very pronounced period of accumulation. Obviously, the goal here, the plan here was for further punishment because as you can see, huge volume to the downside on that movement, big volume to the downside on that movement, and almost similarly, the exact same thing that we saw. Here we have a rapid move to the downside. We have a little bit of consolidation. Individuals are going to attempt to buy that dip. That is the wrong move. And what did we see? We saw a second leg down, and there is the volume spike. Not as big. If we look at the actual, let's actually kind of zoom this up just a little bit. We can actually see that the volume was not as great. The volume was not as great on this secondary move to the downside as we would over here. And generally, that's a good sign. That generally is a sign of trend exhaustion. There was enough momentum to take price to the downside, but it did progress on lower volume. If you collate this to the higher time frames, though, that you can also, again, this is the other reason why I'm not in an active position, because if you collate that to the higher time frames, we know that trends continue on low volume. And it's only when you see large volume spikes, typically on the higher time frames, when you have a significant trend reversal that's going to last weeks or potentially months, as we saw with the bottoming of Bitcoin back in December, as we saw with the breakout of Bitcoin in April, and then as we saw with the top out of Bitcoin back in June. So again, and if we go to the higher time frames, if we go to the daily, and we auto back, we can see that overall the trend is to the downside. Again, we have continuing lower highs, continuing lower lows as well. So far we have not broken out of that market structure. So if you are discretionarily looking at market structure, looking at price action for long, I really don't think there's a good opportunity. And I think this is primarily the reason why the majority of analysts that are making their ideas known publicly are quite bearish, because they're simply looking at market structure. They're generally, well, some of them are systems traders, some of them are not, but anybody who is opining essentially on market structure and price data to generate their directional bias is seeing just that. And this is what I'm seeing from all the other, I really don't have time to watch them, but I did watch a couple videos over the weekend. They're basically just talking about that. Lower lows, lower highs, lower lows, lower highs. Sounds like a chart guy video. Again, no disrespect to senior chart guys over there. And that's all they're looking for. I think that we have quite an advantage in the fact that we are able to not wait for that break of that particular type of market structure, because if you wait for the break of market structure, you're typically not getting in at the most opportune price. And individuals will even be quite upfront with you that when they are looking for a break in significant market structure on the daily time frame, they often are getting later entries, because if they're waiting for a higher high, then they're already looking to enter in their trend directional flip. Their signal is already coming on a high, right? So let's talk about that. So now they're essentially waiting for a dip. And as we know with Bitcoin, once we make a high, price can often just keep right on running. So there is a danger there of actually not getting filled, of not getting in soon enough, which is why we use things like the baseline, which is why we use discriminators like our volatility filter and like our initiator and our confirmer, so that we don't have to look at market structure. We simply get an objective signal of when to go long and short. And I think that's clearly the better way to trade. But now, so here on the daily, there's no action to be taken on the daily. We're still not getting a signal from our volatility filter. And we've gotten chopped around the 30-period Donchi. And if you kind of zoom out and just look at this from the perspective of the daily and looking for full risk signals, from looking for objective signals, there's not one to be had. There wasn't one we closed below on the evening of the 9th, as I talked about, from the November 8th candle. That hair came back. I don't know why. Somebody got it. Don't worry. There wasn't one on the evening of the 9th, and there's not one today. Now, obviously, we'll see what the daily chart looks like as we close, as we come close to the daily close, where I'll be making my decision on what position to take. But looking at this right now, I'm not seeing a position to take, which means on the daily time frame, won't be taking any daily trades. Going over to the 12-hour, the 12-hour would have had us again. If you are ignoring the baseline over here, 12-hour would have had you in a position on the second, on the first, actually 12-hour close, because you guys have to understand. Sorry, I'm biased from the time frame that I'm in, but on the 7th, so at noon, essentially UTC time on the 7th, you could have entered into a short signal and taken price down. You'd actually be in a fairly profitable position right now. You would have gotten an exit signal here immediately right before the Jericho candle, which was great. And it's not really a tremendous Jericho candle. I mean, this would be a Jericho candle, but you guys understand what I'm saying. So there's really not any action to take on the 12. What is interesting here on the 12, I will point out, is that we are getting two, so one signal, one objective signal, and one discretionary fly in the ointment, if you would. Because, and let me point this out, on the 12-hour time frame, looking at looking at minks right now, we are, of course, below our 0 line. We are below on the centered oscillator. And we are crossing below. The 12-hour minks is crossing below the noise line right here. And CCI is clearly below 0, so we are all postured and set up to be taking shorts because those are two bearish indications that we're looking for. And our volatility filter on the 12-hour is actually rising. We are getting a rising explosion level from Wada Tar. So this is telling us that we're good to go. We're good to go for a continuation short. Again, the primary one coming over here and the secondary one, or excuse me, the continuation trade potentially coming in tonight on the daily close from the 12-hour time frame. What does that mean? This is a short signal. This is a continuation short signal. This is generally a 2% risk trade, and that is there on the table. Now, the only fly in the ointment there, and by the way, this is likely a signal that I'm going to be taking this evening, as long as there's no other discriminating factors. The only fly in the ointment is the doji. Right now, this is discretion. I've talked about this before. If you go and plot out basically where all the trend reversals in Bitcoin go, and if you're looking for the most simple, highest rate of success, you're looking for a sustained movement to the downside, 2 or 3 or more candles to the downside, and then a doji. Price generally reverses, right? It's not 100%. There's no such thing as foolproof trading, but it's typically a good price action strategy, right? It's very simple, and simple strategies tend to work. Same with movements to the upside, 3 or 4 or more, 2 or 3 or more pronounced candles to the upside in a micro trend essentially, then a doji, and then price typically reverses to the downside. There's usually opportunity there, and you usually have a pretty good entry if you just wait for the close of that doji. You don't get to max out, you don't get to enter on the wick, but again, that's not for you. If you're a retail trader, those are not your trades. And again, one of the things that I rant and rave the most about is individuals who post trades like that and make it seem like that is common or typical, or that is consistent, and it is not. That is typically consistent of those who blow out their account the quickest. Now, what does that mean? That means a potential discretionary long signal on the 12-hour and a PTP short signal on the daily. There are many ways that you could trade this. You can take both positions. If you have 2 accounts, you can do this on Deribit, obviously, with child accounts. I know that there's a lot of hate around Deribit right now. I would like to point out, before people are super quick to point the finger at Deribit, and again, I'm not actively trading on Deribit, so this is not to the best of my knowledge, biased in any way. A lot of people are kind of screaming at the sky at Deribit for what they chose to do with this last flash crash, apparently on Deribit. We've seen this on other exchanges. And I think the test comes now. Well, obviously we can see who's using Coinbase Pro's data, because when Coinbase Pro screwed up, Deribit's order books essentially crashed. And I think the big hate is that they made whole all the traders who lost money, but they allowed traders who got filled to maintain their positions. And there's a lot of conspiracy theories that are being thrown around this, basically that, oh, well, Deribit must know a lot of people that got filled. I don't think that's correct. Of course, we can take that negative opinion, but just as I've been a vocal critic of BitMEX, I don't think that a lot of things that they're doing are active collusion against the trader. These exchanges desire to make money, and they have a great business model. I don't see them jeopardizing that, because again, the reason why a lot of these exchanges have been around for a long time is because they are generally well managed. But this is still, I'd say, 60% Wild West of crypto still, which is why it's exciting and why it's entertaining. And I think that in the case of Deribit, it seems to me that they're applying the same standard to individuals who got filled, right? They made whole those who lost money. What are they going to do? Steal the fills of those who got filled? You're asking them to apply a two-sided sword, essentially, or excuse me, a one-sided sword instead of a two-sided sword, right? I think the swords should cut both ways. If they're going to restore individuals that lost money or got liquidated, which they did, anybody that got liquidated on that movement, they restored their funds. Anybody that got filled on that movement, they let them get filled, right? They let them get filled. And I don't see how that doesn't make a whole lot of sense to people. Again, maybe I'm wrong on this. This is just my personal opinion. I'm not actively trading on Deribit, so I don't really have a decision or a biased opinion on this one way or the other. But it just seems to me, I do feel like the vitriol that's being leveled at Deribit right now doesn't really make a whole lot of sense to me. But anyways, there are other ways to do this as well. You can simply create 2 accounts on whatever exchange that you're trading, or you can use multiple accounts. So you can use BitMEX to go long, or you can use ByBit to go short. Whatever is your primary account would kind of be the determining factor in that. You can do it vice versa, however you like. But that's totally valid as well. You can take a long and a short at the same time, essentially being hedged up. Of course, a little bit different from going 1x short to hedge your entire position, but that's fine. You can counterbalance your trades this way, and you're going to get an exit signal almost immediately, because I'll tell you why. Because listen, if we look at the way that the 12-hour MINX is structured right here, if we get a consecutive candle to the downside, well, that is going to be confirmation that you should most likely be out of your long, right? So you'll close the long out, you'll ride the short down. If, on the other hand, if we get a green candle, that is almost certainly going to make MINX coil right here and flip immediately back up, potentially even close differently, depending if this happens before the evening close. And that lets you know immediately that is an exit signal for your short. So you exit the short, you ride the long up, right? You can add the position to your long if you had structured your trades in such a way. Basically, what you could do is take position size each trade, so the long and the short, for 1.5% risk, or whatever your total risk. Say you want to put one trade in on Bitcoin, right? So say your risk percentage is 3%. What I mean by that, for those of you who are new to the channel, is if you're going to risk 3% of your account per trade, if that is your acceptable risk tolerance per trade, I obviously recommend having discretionary position sizing. Make sure to go check out my Ichimoku strategy video here on YouTube, yt.crackingcryptocurrency.com. If you're unfamiliar with that term, discretionary position sizing, all that means is essentially having other discriminating factors or discretionary factors that you can look at to determine how much risk you want to take per trade. And this can adjust and fluctuate over time depending on what the market conditions are. But in this case, say you want to take a 3% risk trade, you could structure each trade for 1.5% risk. This is going to affect primarily your position sizing. And the way that we position size is based off our actual entry and the distance to our stop loss. Very simple formula, very simple calculator that we create and provide for all of our members who join the group. What you can do with that is exit the losing trade and add the position to the winning trade. And then that's how you scale in essentially to a winning trade and ride that up. This is a good way to hedge if you're unsure of what market direction you want to be in, but you want to be in the market and positioned to take advantage of a potentially volatile movement, which I feel a lot of people feel like we're gearing up for. So that is definitely one way to go about doing it. That is, again, specific in my trading strategy to the 12-hour time frame. And assuming that everything looks the way that it does, will, with about 90% confidence, most likely be what I end up doing tonight at decision time when it is time for me to trade in the evening. Now, let's move on from the 12 hours. We've discussed that potential setup on Bitcoin. Let's go to the 4-hour time frame and see what we have here. And these are really the time frames that I'm watching a little bit more closely now to see if I can get confirmation. We do have a couple setups here on the 4-hour time frame. I know that there were some premium members who took this because they DM'd me. I know in particular one of our analysts who actually took this same setup as well. We did get basically they were long in the consolidation period here that we talked about. This is it represented on the 4-hour time frame. We got the Jericho candle. They took profit off of that Jericho candle. And on the 4-hour time frame, what do we see coming in from that Jericho candle? Where did it reject from? From the baseline. From the baseline on the 4-hour time frame. What is the baseline? It is our dynamic level of support and resistance. When you are bearish, where should you be looking for reversal trades? You are looking to take reversals in the direction of the trend, not against the trend. We're not counter trend traders here. If you're going to take reversal trades, that's fine. You need to be taking those reversal trades in the direction of the trend. This is trend following theory, basically. If you are bullish, you are longing every dip, right? If you are bearish, you are shorting every correction. This is very simple, basic trend following strategy, and simple strategies work. Okay. If you get too complicated, then stuff starts to go out the window. And not that complicated strategies can't work, but often I know a lot of very, very smart programmers who sit down to try to build trading strategies, and they end up getting way into the weeds, way down the rabbit hole. And come 12 months later, they've got lots of ideas, but no execution. They actually haven't gotten into the market, and they're not practically any farther to building a system. So, PTP is simple. It is comprehensive. But it runs off simple principles, right? And I think the main edge that we have in our education is that we take simple concepts, we take complicated concepts like the market, we distill it into simple rules, and we lay that out in a very step-by-step coursework application. But essentially the setup here was to ride the Jericho candle to the upside as we were bullish coming into the weekend off of Friday, taking their profits off of that candle, seeing the reversal baseline, seeing the rejection from the baseline again here in the form not of a doji, but of an inverted hammer candle. and taking price to the downside. And I think that was a good setup. They are currently now taking, and that same analyst just let me know, obviously, this morning that they took profit on this trade, and now they are out of the market like me. They are biased to take price to the upside, but they are looking again for that sustained dip. Let's not forget that we have an order block sitting directly beneath us. We did wick down, not only on today's daily candle, but obviously, as we can see, as part of today's daily candle, this 4-hour candle right here, we did wick down to the very top of that order block. Let's go to the daily and dissect this order block a little bit here real quick. Boom. Again, that order block was generated, and it's a little wide right here, but this order block was essentially generated right here. Now, there are a couple different ways. Actually, this breadth right here is not the order block. The actual order block is just this baby right here. Boom. Is just this baby right here. And you can see that we did reach down and tap into that. Now, the particular analyst that I am talking about, he would like to see a little bit more. He wants to see basically a second push down. Basically, he's trying to get filled with an average entry of around 8,400, 8,300. But the two levels of support for him, and as I have plotted out on my chart as well, as we just work together and collaborate, are again going to be that 8.55 and also 8,230. 82.30. So looking for an average median fill between those levels, very similar to what we were talking about on Friday with looking to get filled at 8.55, just pushing those expectations down a little bit. Now that's fine because what we can do as well is that fits very well with that 12-hour potential setup. You take the long, you take the short, you drop the loser, you ride the short down, and we wait and see what kind of reaction we get from that. Again, still discretionary as we're talking here, looking for these setups. But what we can do is look at the 4-hour and going down even lower, potentially to the 2-hour, and looking for that entry signal on those time frames. Now, that's not going to be a daily setup, but these are the trades. These are the time frames with PTP that can give you that movement. And I really only recommend this in Bitcoin, maybe Ethereum, because they're just liquid enough for you to be able to trade the meso time frames, whereas pretty much with everything else, and this is even true of BitMEX alts, although you can apply this to BitMEX alts as well, but anything going down to alt BTC pairs, going to alt USDT pairs, going to any other fucking cryptocurrency, whether it's traded or trading against the dollar or trading on Bitcoin, you want to stick to the higher time frames because these are currencies, these are assets that are highly volatile and are going to give you a lot of intraday movement. And you're going to end up likely being kicked out of your position very frequently with these trades. And that's fine. Again, PTP is set up for you to take the comprehensive whole of more profitable trades. And it all works out strategically in the end, especially once you apply a good risk management and position sizing strategy. But the reason why we want to stick to the daily on those is that these, I mean, let's be quite frank, most altcoins are going to mostly like skitter around with their average true range all the time. Up, down, up, down, up, down, up, down, up, down. And then they're going to put in a massive movement in one direction or the other. And why would you not want to be capitalized on that massive movement? Why would you not want to be waiting for that massive movement? Why do you want to be trading the lower time frames and scalping fucking shitcoins when the propensity for damage to your account balance is so high there due to lack of liquidity? You can do all of that over on Bitcoin and Ethereum and be just as profitable, and I almost guarantee you more profitable because the liquidity is there and it's still highly volatile. That's my thoughts on that. Okay. Now, on the 2-hour time frame, we did have a quite beautiful PTP short signal on this candle, allowed us to capture the breadth of the highest volume 2-hour candle in a short trade right there. Your stop loss would now be at break even. I feel like that stop loss would get hit at break even again. I think you would have cashed in on take profit 1 and 2. Let's check. Excuse me, sorry. Okay, here's the signal right here. 1, 2, yeah. You would have hit TP2 on that 2-hour short setup here on Bitcoin, and you would have your stop loss at break even right now. I feel like that's likely going to get hit because your stop loss would be sitting right now at 87.99. We are on the ByBit chart right here. 87.99 is where you'd have your stop loss, and we've got the baseline on the 2-hour time frame coming in at 88.66. So all we need, look, we're already turning up. You've already gotten the exit signal, from Mink. So you would already be out of your short signal, out with great profit. That was your daily trade, done, boom, bam. You've already done what you need to do for the day. And what you're looking for right now is the long setup on the 2-hour time frame. Again, what we need to see is price above 88.66. And I almost guarantee you, if we do get up that high and get a nice, strong 2-hour close, then we're also going to have everything correlating as well. MINX is going to cross above zero line. Of course, it's already above the noise line. CCI is going to be above the zero line. We're going to be closing above the baseline. And all we would need to look for at that point in time is the volatility filter to be firing, which it is currently firing right now. So let's see. The other thing that has a high preponderance to happen, which again is another reason why I am flat. I'm actually spot long, but I'm flat as far as full risk positions go. So excuse me, I'm not flat. Those are two completely different things. I am spot long on Bitcoin, right? I am spot long on Bitcoin. Depending on what happens tonight will determine whether I hedge up or not, but I'll also be entering into active trades as well. But as I said, I posted to the premium members as well. I am unhedged spot long on Bitcoin, which is fine because I have that. I have my other active positions as well. So looking to capitalize if we do end up getting this nice kickoff to the upside. The other thing that does happen, and we do have to be quite aware of this, Bitcoin has been guilty of this pretty much for the last 4 months, is movement, nothing, movement, nothing, movement, nothing, movement, nothing. And you guys are well aware of that, right? The last few months have been fairly treacherous and tricky to trade with. Now, we've done quite well, but October was a break-even month for me. October was a break-even month for me, which, again, being a month in which I personally know many people that lost a lot of money from getting chopped up by the market, I'm extremely proud of, right? I mean, one thing that we have to remember here, especially in the premium trading group, me as a trader and us as a group, we've put in double-digit returns on our equity almost every single month this year. And our worst month, we broke even. I love my job. I love this market. I love the people that I work with. This is absolutely fantastic. And this isn't, listen, it's not all rainbows and unicorns. PTP is not a get-rich-quick scheme. It's not a get-rich-quick program. You put in the work and you trade in the right direction and good things happen. It is that simple. All these people are running around, in my opinion, being completely unproductive. They have complicated strategies. They speak in convoluted methods. They're talking about all these external factors to the market. None of that matters, man. A couple indicators, the chart, and a baseline, and you can do a lot of damage. That's what we do day in and day out in the group. Simple strategies work. Convoluted nonsense is convoluted nonsense, right? Fib spirals, Elliott waves, trend lines, triangles, diamonds, pennants, shapes, bears, bulls. It's freaking nonsense, man. You don't need any of that. Systems trading. This is how quantitative firms, this is how hedge funds trade. You know, I was telling a story the other day, about some of my early days of doing remote work, of doing remote trading, and this prop desk, they trained their employees in a very specific way, and they told their employees, they said, listen, we are going to teach you the strategy that we want you to execute in the market, and all we ask of you, if you want to remain employed here, is to trade that strategy. We don't care if you lose or make money. Just follow the rules. Just trade the system. The amazing thing that I noticed was that most of these traders could not pull that off. They got subjective. They added stuff. They removed stuff. They took discretionary trades, even with the knowledge that all they had to do, even with the assurance that all they had to do was trade the system that they had been taught, and they would maintain their job. And as a result, that firm had a high turnover rate. But the traders that followed the rules stayed. And that firm was highly profitable. The reason why is because they traded like I do. They knew that they had a strategy that over time was profitable. And any individual worker bee that came in and tried to screw that up, because remember, the traders are trading the firm's capital. They're responsible for the firm's profits. The firm has this overall vision and overall plan of how they're going to get from here, capital, to here, at the end of the year, more capital, profit for their shareholders, for their investors, et cetera, et cetera. And what the biggest fear to a manager of a prop desk or a prop firm is a worker bee coming in and getting all discretionary on you. When you as a systems builder already have the game plan. Like, we're going to make money over the course of the year. Some traders are going to lose, some traders are going to win, but in the end, it's all going to balance out, and it's robotic, it's consistent, like clockwork. So overperformers want to come in and get all discretionary, and they're like, look, mom, look what I did. I made 40% this month. Great, kid, you're fired because you screwed up the plan. You screwed up the system. PTP is no different, man. You follow the rules, you make money. It's that simple. Now, preach! Forza World TV over on D-Loud. Love you, brother. Okay, is there anything else to go over here on Bitcoin? So, final summary. Flat, actually spot long. I'm not flat. I am spot long on Bitcoin. On the daily, we have no signal. We have an interesting couple levels of support or a potential buy-in areas at 8.55 and 8.23. Interesting areas right there. On the 12-hour time frame, we are potentially getting a signal, and we have to wait until tonight's daily close, because that's when this 12-hour candle will close, to potentially go long and short simultaneously. We went over how to do that on multiple accounts, and then drop the loser on the next 12-hour candle close. So essentially, you will go to bed tonight being long and short, and when you wake up in the morning at 7 o'clock a.m. my time, 6 o'clock a.m. my time, which is when the 12-hour candle closes, you will dump the loser and add that position size to the winning trade, ride that down. For me, I have more confidence that that will be to the downside. Again, discretionarily, looking at price action subjectively, I'm interested to see what reaction we get off this, kind of 8.55 touch. We didn't actually go down as low as 8.55, but I'd be interested to see if we actually have enough to get an umph off of here, or if we do dive down. Now, intraday, I do think that price is fairly exhausted. I think we're likely going to see what we saw over here. So let's go over to the 15-minute time frame to kind of plot that out, what I'm talking about here. If we go back to the previous dump to the downside, we had one leg down, a buyback, which was not very smart traders trying to buy the dip, and then the collapse on high volume. And then price moved sideways for pretty much the entire day, and then Jericho candle. But you can see that overall the trend was to the upside. I mean, there was more opportunity taking price long in this area than there was short. You can see very clear pronounced movements to the upside, and choppy, slow to the downside. And then a big Jericho candle, sideways distribution, huge plummet to the downside. And I think we're likely to see the same thing. I think we're likely to see overall intraday price be more bullish than bearish, but with a heavy emphasis on consolidation and sideways movement. And we'll see if we're proven wrong on the 1 hour or the 2 hour. Really, I don't really want to delve any lower than the 2 hour time frame at this point in time, but we are getting a pretty interesting reaction off of the 2 hour. I wouldn't actually. It's not even really interesting. It's just a little bit of a bullish kick up. Again, for a full nice long signal, we do need to see price above 88.66.50 at this point in time. 88.66. So we'll see. 12-hour time frame, long and short at the same time. We'll see if we can get filled with the lower if we do end up dropping the winner and taking and doubling down on the short, and see kind of how price reacts around 8.55, 8.23. Other than that, on the daily, waiting for price to close back above 89.29. So really, we need to get it back almost close in the vicinity of 9,000 before we can look to be taking a trending long to the upside. But again, we can see that on Wadatar Explosion, if we look at where our volatility filter is hanging out, hopefully you guys can see this quite well. It is up, right? So we had expanding volatility, and we are on the downside right now. Now, we can, of course, get continuation, right? We can, of course, get a little bit of a movement down pronounced right here, and then continuation to the upside, which does represent profitable areas to trade. But it is more often that we do get, after a pretty large move to the upside, that we do get volatility coming down, right? So again, consolidation, more chop. Looking at this indicator does seem likely as well. Now, 2 hour time frame, again, looking for that close above 88.66 to take price long as well. Although I can understand the reversal trade taking price up there, right? But for me, no decision to make. I'll be doing the 12-hour split as we talked about, and waiting for that stronger daily signal. And then I'll take whatever the 2 or the 4 hour gives me if I'm sitting at my trading desk and able to catch it. Moving on to... Actually, I think this is a good opportunity. I'd like to present you guys, so based on the fact that we've got a little bit of chop, a little bit of consolidation, and a little bit of confusion in the market, I'd like to introduce our new segment here on Breaking Bitcoin, the weather report from junior analyst Midwest Attempts. Midwest Attempts, what do you see for us in the market today?
Well, as you can see here, we had one high here and then a low right there, and with it going up and down like that, we're pretty sure that it's probably going to do it again. So, buy. I think. What do you think? And with that being said, let's take it back to you.
Fascinating. Thank you so much, Midwest Attempts. Highly appreciated. Well, there you have it, guys. Buy, I guess. Yeah. All right. Now, let's move on to Ethereum. Let's go to the daily on Ethereum. Now, on Ethereum, we do have, by the way, huge. I love that so much, man. I love that so much. Huge shout out to you, my friend. You really crushed it. Now, really good cityscape back here. Now, the trade that you do see behind me is active. The trade that you do see behind me is active. This is XRP USD. I am in an active short on XRP USD. We'll actually get to that in just a moment before the 1 hour break. So let's go to Ethereum USD. Ethereum USD. Now, Ethereum USD is pretty clear cut, man. Ethereum USD is bullish. We are above on the daily time frame. We are above the baseline. We're actually above the qualifying line right now. So there's no. So if one hadn't already taken advantage of the long trade on Ethereum USD, then they would be waiting for if they were taking a full risk initial signal. But we are essentially looking for a continuation signal at this point in time. Now I am long on Ethereum USD. I do have a leverage position open on Ethereum USD. It's doing quite well. Now, there are a few things that I'm looking out for here. We do obviously have this order block, and for some reason, I'm sorry. Let me save and see if I can't refresh my page. See if the horizontal lines stop bouncing around like Jack Russell Terriers. There we go. Much better. Sorry about that. That happens sometimes. It's, trading views sometimes just, traders, cocaine, hookers. It happens. Now, on a Ethereum USD, we do have an order block from 191.75 to 193.20. We can plot this order block genesis all the way back here to the beginning of October. Although if we do go back, it has other consistency as well. This would be a ICT style. Again, I hate to like reference him because again, I'm not intimately familiar with the way that he trades, but I've had a lot of people tell me that this is essentially how him and his ilk, Trader Dante, all these other people, how they plot order blocks as well, which I don't agree with, but that's fine. But again, we do have a buyback period right here. We do have an interesting area of consolidation in the chart. And if we get off the ByBit chart and go back to something like Bitfinex or Coinbase, we can actually get a little bit more historical data. But anyways, we can see historical price is far less relevant than current price. Again, we trade based off current price as a trend following trader. You only have one data point, guys, and it's not a fucking trend line. It's current price. The only data point that you have on a chart, the only data set that you have that is live and giving you live data is current price. That is fluctuating. It is always changing. It is always an auction style market debate between buyers and sellers as to what the fair market value is. And you have speculators thrown there for a good dose of WTF is Bitcoin doing right now. In this case, WTF is Ethereum doing right now. So anyways, we have gotten rejected from this order block multiple times, but a couple things have happened. Let's talk about this first. The not PTP, but the discretionary breakout setup that I always look for. And we've got some beautiful sun coming out to melt the snow because I did wake up to 4 inches of snow today, which is, continual rejection from an order block or from a dynamic or static level of resistance. Forming higher lows above the median of the distance between the low of support and the high of resistance, which we have done right here, holding a consistent level, which actually what's interesting here, sorry, it looks like I had Bell's palsy when I do that. What's interesting here is that the baseline, the 30-period Donchian, is holding that up pretty well. So we are above the baseline on Ethereum. Ethereum has held up amazingly strong. Has held up amazingly well compared to Bitcoin, which has been kind of pushed around like a toddler in an abusive household. And that's a lot of people watching. Highly appreciated. Eli Back, thank you so much for the $5 donation, my good friend. And he asks, Neo to the Bitcoin when you get a chance. Thanks, bud. And Eli Back says, 400 people watching, but 34 likes. Hey, man, stuff happens. Thank you guys so much for all the support, for everybody watching. Highly appreciated. Links down in the description for everything that you could possibly want in life as well. But on Ethereum USD, continual rejection from the order block. Again, fitting the qualification of that setup that I do like to see. And again, already long on Ethereum, but holding that median line. What is it going to take for me to exit out of my position? Well, it will be an exit signal at this point in time. Interestingly enough, we just got a fresh continuation signal, or will be getting a fresh continuation signal on Ethereum USD to the downside, which is nice. I always like that Minx, not always, but consistently does tend to get us into a long position on a down candle and into a short on an up candle. It is quite beautiful how it does tend to do that. If you use it as a line crossing indicator. When you're using it as a centered oscillator or as a line cross indicator, then your results can be a little bit different. Okay. So if we're looking for a discretionary breakout, we do need to see Ethereum above 191.75. Again, that order block stretches from 191.75 to 193.20. So as I talk about with order blocks, if we cross and close within the order block, that is considered a violation and a penetration of the order block, and you can take price in a breakout setup to the upside. I already have my take profit targets already for Ethereum. I am already holding my trade. With Ethereum and with Bitcoin in general, the way that it's been trading lately, we always do get a little concerned when we droop, when we go sideways, when it's boring, when it's boring, right? Which is essentially like, you know, it's boring right now. Ethereum is fairly boring right now on the daily time frame. But again, maintain my position open. So really the only area of interest here for me on the daily time frame is that order block, waiting to see. I think the setup would still be at this point in time accumulating Ethereum on any dips closer to 176.25, which is that median baseline that we talked about. As long as Ethereum holds 176.25, pretty positive for the future of the asset. Now, going down to the 12-hour time frame, 12-hour time frame did just give us a reversal baseline bounce and is throwing in that doji. We just talked about dojis as well. Not a conflicting signal at this point in time. Maybe tomorrow morning could give us that potential long-short conflicting signal, which you could take, where you have the doji in conjunction with a PTP short signal, but nothing extremely interesting here on the 12-hour. Again, the previous 12-hour close that occurred this morning did actually give us a reversal baseline bounce on Ethereum, so we could have taken price to the upside. On the 4-hour time frame, we did get let's take a gander here. Yes, we did get a 4-hour short signal on Ethereum on this candle close that occurred at 4 o'clock in the morning UTC time. We would have grabbed at least one TP on that. Actually, no, we wouldn't. We would not have. We would have not have grabbed a take profit on that, but we would have had an entry from the candle close was 186.80. You would be in profit right now. Price currently sitting at 186.05, about $1 to the downside, give or take, not really quite that much. And we haven't gotten an exit signal yet, right? So we still have Minx pretty much tromping fairly strongly below the. Actually, you know what's interesting is that was not a signal. Look where CCI was. CCI was above the zero line. So this was not a confirmed trade. This was not a trade. This was never intended to be a trade. I apologize. Let me take that back. Let me just, you know what? I think that deserves a dove's flying for me. I apologize. Sorry for anybody that I might have hurt. But we can't always. Hold on a second. Can't always be like this all the time. Sometimes I'm doing a chart. I'm feeling like this. But sometimes it's more like this. Just depends on the day. Now, let's see here. I want to get to XRP. Nothing really interesting with EOS today. But on the 4-hour time frame, do we have a valid setup? We don't. We don't have a valid setup. On the close of this 4-hour candle, we could potentially be looking to take price short, but our volatility filter is not confirming. So there's nothing there. We do have to wait. On Ethereum, we are flat on the 4-hour. On the 2-hour, did get, again, not a signal here. Was not a signal, was never intended to be a signal. The last signal would have come here. We were outside the qualifying line. So again, you could have bought up these two candles right here. These two candles on the 2-hour time frame would have been qualifying trades, would have put you in for that nice Jericho candle. And miraculously, we do get an exit signal right. Not miraculously, but predictably, do get a beautiful exit signal right there. So we stay out of the drawdown. So again, on the 2-hour time frame, we had a profitable trade to the upside, waiting for the retrace as we should in PTP strategy, buying these two candles right here. So accumulating right around 186.50. And then we were getting the exit signal at 189.81. So a nice, good setup and trade right there on the 2-hour. Other than that, there's nothing right now. Volatility filter is falling down. Volatility is dying off, which lets us know not to trade right now on Ethereum on the lower time frames. On the daily, still long. Let's get over to ZERP. I do want to talk about ZERP today. And again, if you look no further for crypto analysts worldwide talking about how bearish ZERP is. But again, I'm short on ZERP as well. Net Brand 360. What's up with all the indicators? Doesn't that confuse the shit out of you? No, because I am a systems trader. So the indicators do one thing and one thing only. They give me a signal. That's how I trade, man. Subjectivity is the route to not having profit. The only discretionary indicator on here is time transformation. But other than that, no. It's time for the daily spin my chair around. I feel like I was going to break something if I did that. Let's try it over here. How about one more? Okay, good. Yeah, that's right, guys. Oh, shit. Justin crossed his legs. It's about to get fucking serious up in here. Open the chest before break? Yeah, sure, man. I'd love to. Big love to all my D-livers over here, man. All right, guys. I'm going to actually toss some loot in the chest. And I'm going to open up the chest in about 5 minutes. So, guys, go crazy. Do your thing. Go wild. Yeah, if you think that's bad, man, you should look at Scott's chart. It is indicator overwhelming. Anyways, so let's talk about this setup on XRP. Essentially, looking right here, we did get a fully confirmed short risk trade here on XRP USD, a short signal to the downside. Didn't actually take that. I took the opportunity, again, to take the doji right here for a reversal baseline bounce. So I entered into the trade yesterday on yesterday's daily candle close, and I got to wake up to a very nice katunk to the downside. So beautiful, nice setup right there. Nothing disqualifying. It does look like a potential, like depending on how the daily closes, I doubt I'm going to get the exit signal here from Minx. But that'd be cool. Being able to exit the trade in a nice quick profit would be fine. I'd be okay with that. I would like, obviously, you always want to hold the trade open for a greater profit, but if you just follow the system, if you just listen to your indicators, and sometimes you get out with a small loss, sometimes you get out with a small win, but it keeps you away from the big losses, which when you plot that out over the year of your trading or the months of your trading, ends with consistent profit. So that's the most important thing, is being consistently profit. Once you develop that dedication to being profitable and not being right, which is where almost all traders fail. Almost all traders tie up their ego with the trades that they put on to where they feel, again, let me make this abundantly clear because this is probably the most controversial thing I say. So I want to state it. Actually, I'm going to go to the big screen for this. I think we're going to clip this because this is important for traders to understand. I've been trading for 10 years. Okay. I'm a consistently profitable trader. I have worked, mentored, and studied under a lot of traders. And here is one thing that I've learned. It is impossible to predict the market. There is no amount of analysis that you can do. There is no amount of trend lines that you can add to your chart. Fib spirals, opinions, Medium articles you can read, trading strategy videos you can watch that will allow you to know with a 100% level of confidence whether any trade on any given day that you enter will be a winner or a loser. Every single individual trade is a Bayesian random walk. It is a coin flip. Every single individual trade, plotted alone as a data set, statistically is a 50-50 trade. Doesn't matter how good your system is, doesn't matter how good your setup is, doesn't matter how good of an analyst you are. Doesn't matter how many levels of support and resistance we break into. Doesn't matter how many order blocks we break through. Doesn't matter how many Kumo clouds we break through. It doesn't matter. You have zero ability to determine whether price will go up or down with 100% degree of confidence on any individual instance. It is random. What is not random, and this is the difference between traders who have spurts of profitability, but are not consistently profitable traders. Anybody that you see on crypto Twitter or crypto YouTube or whatever, it doesn't matter where you see them, or if you find them in Discord or Telegram, it doesn't matter where you find them, right? Maybe you meet them on the street at a San Francisco Blockchain Week event. If you look at the way that they trade, a lot of traders make the mistake of posting charts when they nail it, not posting charts when they don't, but that's just pretty classical. But a lot of traders will talk about how they have a lot of degree of confidence of this trade. And that's fine to talk like that, but I find it's very, very, very conducive to profitable trading and good mentality and proper mindset and full disclosure to let people know, the truth that this individual trade is a random walk. Now, here's the truth though, and this is what underlines everything that I do with the way that I trade. Although you cannot control for any individual instance, a series you can control for, because one data point, i.e. one trade, is random. 50 trades are not random. You can review the statistical probability of your trading model, algorithm, strategy, and understand when plotted out over enough time and space, whether that system will be profitable or not. And the proof is in the pudding. You run the system live with capital and you're either profitable or you're not. You either make money or you don't. And the problem, maybe not the problem, but the reality is that a lot of traders who nail it are not consistently profitable traders. There's lots of psychological artifacts that can occur. There's lots of emotional artifacts that can occur when you are becoming a professional trader. Generally, this comes from upgrading the amount of capital that you're trading with. Traders will go on a winning streak and then exponentially increase the amount of capital that they're trading with and totally bomb. That's why you kind of need to edge into that. But that's the point. Hopefully I nailed that pretty good. But that's the absolute truth from somebody who's done it for a long time. If you don't build a system like all quant firms do, like all prop firms do, like all prop desks do, you're not going to make it in this game. So cut the trend lines, cut the fib spirals, cut the Fibonacci extensions, cut the triangles, falling pizzas, wedges, shapes, spirals, diamonds, Elliott waves. Nonsense. No professional trader trades like that. Not after 5 years. Not that I've met. I've met some Elliott wave traders that sell courses that have been around for 5 years, but they're not profitable traders. In my experience. Correct me where I go astray. But almost every single consistently profitable trader I know who I still work with or am colleagues with that's been around for the same amount of time that I have, they're systems traders. And there's a reason why hedge funds, prop desks, prop firms, why they hire quants and not trendline traders. Back to the charts.
Well, as you can see here, we had one high
Let's open
here
up that
and then a low right there. And you know, with it going up and down like that, we're pretty sure that it's probably going to do it again. So, buy. I mean, I think. What do you think? And with that being said, let's take it back to you.
Thank you, Midwest. Thank you, Midwest. I appreciate that. Thank you, sir. I believe we already went over that, but thank you again for reiterating your opinion on the market. Trading and Domainy, thank you guys so much for the subscriptions over there on YouTube. Eli back. I do want to get to your Neo BTC request, my good friend. So with that being said, let's go open up those chests on. Let's go open up the chest on DLive for you, and we are going to distribute these rewards on DLive. So congratulations, everybody. 28 seconds to chest distribution. 25, 24, 23. And spinning around. Yes, Mr. Ether. I'm sure I am defending my system. And 10? I don't know. I can't see. I spun too far. 9, 8, 7, 6, 5, 4. Eli back. Thank you so much for the $2. And I am excited as well. 600 watching, guys. Welcome to the family. All right. Big Saintsy getting 18.6. Lemons. Lefty on fire with the 11.1. Forza World TV 8.3. And Wendy 2 6.8. And of course, my good friend Mass Stash coming in with the 5.8 lemons. Love you guys. Thank you so much for the support. GB Wally says, people mention SIBA a lot, but a Google search terms up nothing for markets or trading. What is that term? It's silver. It's SIBA is it's comes from the gold bugs, but it's a term for silver. It's a trading term for silver. What is a quant? A quantitative analyst. So typically somebody who's very good, a mathematician or a computer scientist, typically both nowadays. Somebody who went to school for, or is very, very gifted in programming or engineering or mathematics or data analysis or statistics or building out risk models. So typically what the big banks and what hedge funds and all these individuals, all these large firms will do is they will come into the universities and they'll just grab the best engineering students, the best mathematicians, the best physicists, and they'll employ them to create risk models or systems trading applications. But and there's a lot of like risk parity going on nowadays. There's they've got so much data, man. They need to collate that data and pull profitable information, actionable data out of the morass of data that they're inundated with. Yeah, all crypto devs, basically. I guess people are not wanting to say silver so as to not trigger the sentiment bots. I don't know. I know I just know that the term's been around for a long time. All right. We're going to take a brief. It's going to be brief because there's a lot of people in here today. So it's going to be a brief, somewhat like 30-second break, guys, just so that I can restock my water. And when we return, Neo to the Bitcoin for Mr. Eli back, as he has been patiently waiting. We got a little bit of news to talk about. We can look at the Forex charts and any more of your chart requests. So if you have anything you'd like us to look at while I'm gone, that was about 30 seconds. So if you have anything you'd like us to look at, please put your chart requests in the chat and we will try to get to them as well as possible. A lot of you guys in here today, but the mods do a good job. So be nice to them. They're good at what they do. All right, guys, I'll be right back. Don't go anywhere. And we're back, guys. Thank you so much for the patience, for hanging in there. I was chatting with the analyst there a little bit. Good, as always. Killing it in the premium group as well. By the way, I want to mention a few things that are upcoming. So, pretty excited. I talked to a couple of the members. I don't want to speak outside of school, but you guys have been kind of waiting for a ByBit video for a while. That is going to be coming to you very, very soon. And also, a new way, this is mostly for the premium members, but a new way for the dissemination of information for our nightly trade setups for all of our analysts should be in the pipeline and coming to you very quickly. We've been looking at ways that we can improve that as well. If you're a premium member, I do highly recommend that you go fill out the survey. And I want to thank everybody that has filled out that survey because that has given us some great feedback on basically what we're doing well, and as always, what we can do to improve everything that we do here at Kraken Cryptocurrency. As always, if you are a viewer of the live stream and you enjoy what we do every day, please leave a comment down below with what you've learned, with what you'd like to see with basically what you'd like to see more of, with basically what you would like, just your comments is always helpful. The feedback is always helpful. We've grown quite a bit if you go back and look at some of our earlier streams, both in quality and in the content that we cover. And it's, as somebody who is slightly neurotic about the production quality of what we do, your feedback is always highly appreciated. So please let us know what we're doing well, let us know what we're doing poorly, and what we can do to improve as always, guys. But overall, thank you so much for being a member of our community, because we've been doing this for quite a while now. We've been doing the live streams for a very long time. And our community has only grown, and I am continually blown away with the kindness, with the hard work, with the dedication of everybody that comes in and contributes. You guys are absolutely amazing, and thank you for showing up every single day and supporting us. And we couldn't do this without you, so thank you guys so much. With that being said, Mr. Eli Back has waited very patiently. So NEO to the Bitcoin. Let's go check out our big bag of NEO, my friend. All right, let's start off. Let's see if it's germane to look at the monthly. So we kind of have this situation where we talked about this before. So there are a couple, before we get into the analysis, and we'll break the analysis down, but before we get into the let's look at some extenuating factors, some discretionary things. If we're looking at altcoins for the purposes of investing, and by the way, I have gone on many rants. If you're new to the channel, make sure to go check out in our Trading Crypto 101, altcoin fundamental, or the fundamentals of investing in altcoins. There's a couple of videos like that. But I just want to, again, make it very blanket statement here that investing in altcoins like you would invest in stocks, as somebody who holds a fairly large dividend portfolio in traditional assets, is not the same. You are not investing in the company when you buy a crypto token, right? Now, there are a few exceptions to this, right? There are a few STOs that are exceptions to this. And I strongly believe the STOs will be the new wave of the future, when you actually have something that is backed up by security, when you actually have something in your hand that is backed up by an actual revenue generation share of the company. And again, I always use XRP as a good example of this. Ripple, the company, is doing fantastic. They've done nothing but fantastic things. XRP, the token, has done very, very poorly. Now, Ripple, the company, has traditional investors. Andreessen Horowitz, Google, many others, right? Just to name a few. And they do not invest in Ripple by buying the XRP token. Why? Because they understand the difference between investing in a successful company and buying a token, right? Two different things. The token, if you're looking to invest in a token, which I'm not saying is a terrible idea, I have altcoin holdings, and the members know the two assets that I've recently added to that for long-term holds. But you cannot fairly look at the company, although you can. It's not something that you want to entirely dismiss. But you need to look at one thing and one thing only: token economics. Does it make sense? Is the incentive model built into the way that the network operates? Does it make sense that somebody would reasonably accumulate the token for real world use case potential? Okay. Doesn't matter the partnerships, doesn't matter the announcements. And by the way, I would like to point you guys to Willy Woo has a fantastic thread on this where he breaks down for an investor two types of altcoins. There are degenerators and oscillators. And if you're looking at these two metrics, essentially oscillators keep pace with Bitcoin and oscillate in value around a centered line. They are centered oscillators. They oscillate around a zero line. valuation where they go up and they go down. And you're looking for coins, ideally, that have survived at least one full bull and bear cycle, right? There's a full long Twitter thread. Just go check out Willy Will on Twitter. He's got a fantastic thread about this. Whereas the rest of the degenerator coins have just done nothing but a straight line down. And I think that ties in very, very well with looking at token economics. Well, excuse me. So the point I kind of want to make from that is that, again, you don't, Doge, for example, is an oscillator. It's one of the strongest oscillators. Doge has held its value amazingly well. And Doge is a coin that was started as a joke. It's a meme coin. It has not seen active development for a very long time. There's no foreseeable active development. It does not have an active development team. And Doge holds its value better than a lot of these crypto projects that have cutting edge technology or breakthrough technology or doing this and doing that. Now, again, this is not to say that I do not like altcoins. This is not to say that I don't think that a lot of these projects have merit and can provide real world applications and improve the lives of their customer base. But as an investor, which most of you I'm assuming are, coming to this channel and looking for potential altcoin investments, you have to be very, very careful about looking at the value of a company or the cutting edge technology and the actual economics of the token, because you're not buying stock in a company, you're buying a token. The token economics have to make sense. With that being said, NEO BTC, which I think has decent token economics. Now, full disclosure, I have a position in NEO. It is a more long-term position. It is not something that I'm actively trading. So NEO to the BTC. So if you have that same investor mentality looking at NEO, you do have to see a few things. Price is obviously very low. This is the first thing that we can see. We see this on a lot of the BTC charts. Now, if we can pull up a little bit more historical data, let's actually go to, we'd have to get it before. I wish I could pull up a chart and maybe somebody can help me out when it was Ant shares. By the way, Wally, thank you so much for the $20 donation, my good friend. I got to scroll up. He says, always love the show and your analysis on things like NEO and GBTC. Hint, hint. Maybe as a bonus, you can do some pontificating on staking at Coinbase like Tezos. Learn, earn, and don't get burned. Sure. I'd love to, man. Thank you so much for the continued support. The one, the only, the man, the myth, the legend, Gunbot University, Wally. Shout out to you, my friend, and Gunbot University. Make sure to go check them out. Now, if you are looking for positional holds in altcoins and you see something like NEO and you believe in the fundamentals, again, not the fundamentals of the company, the token economics. That's what I mean when I say fundamentals, the token economics. Then it's hard to not kind of get excited about these price depreciations in altcoins, because again, we know that altcoins have provided us ridiculous returns. And I do fully believe that there will be another ridiculous wave of retail speculation. Now, on the monthly time frame, all we can really garner from the data that we have, which is the chart data on NEO BTC, the price is quite low. There's really nothing else here. On the weekly time frame, we don't have full bullish signals yet. Actually, we haven't had full bullish signals on NEO since May of 2018, which is good. It's just been in a slow degeneration pattern to the downside. What do we see that's fairly interesting here on the weekly time frame? We do see a very pronounced period of accumulation, of almost no price activity. And now look what we have. We have a volume spike coming in significantly on the weekly as we march our way up to the baseline. This is typically something that we're going to be looking at for accumulation and then a volume spike initiating a potential trend to the upside. Now, this will be confirmed if we can get above 0.001489. That is where the weekly baseline is sitting at now. It's a potential that you're not looking at the baseline for weekly trades. That's totally fine. I understand that. I've mentored students who have a trading strategy and setup like that. We do see a few bullish things on the long-legged doji that followed the weekly breakup candle here on NEO was a long signal. Now, the volatility expander didn't fire. But one thing I want to caution you guys on is that on the weekly time frame, you're often going to want to adjust your indicator settings. Okay, so I'm just simply looking at indicators that are optimized for the daily and meso time frames and applying them to the weekly, and that's fine. But volume and volatility filters are often the ones that can suffer the most and need the most tweaking. They are the most petulant of the indicators that we use in a PTP structure. It's like a steam engine's blowing out there. Hasn't snowed anymore, but thank God. So this chart does not look anything but good to me. Now, I do see a strong potential for some significant resistance, overhead rejection at that 1489. We do just kind of need to wait patiently on the weekly time frame and see what kind of reaction we get from there. Going down to the daily, where we are looking for active trades. We talked about this before. We had this big breakup candle over here that really represents the majority of that weekly price appreciation back on the 27th of October, 2019, fall year of our Lord. But we were above the qualifying line, and that lets us know one thing. We need to wait. We need to buy the dip, and that's exactly what occurred here, and that's exactly what occurred here. Buying up these positions on the dip back, qualifying trades within the baseline, or excuse me, within the qualifying zone of the baseline and the trade qualifier. Now, interestingly enough, reversal baseline bounces were also in play here because we did get a nice wick down to the baseline. This is the other type of reversal trade that we talk about, trading in the direction of the trend, taking reversals in the direction of the dominant trend, which once price broke above the baseline on high volume, was a good sign. And now we are off to the races once again. Interestingly enough, on NEO BTC, we actually did get a continuation long signal right over here 2 days ago on the 9th of November, 2019, and we are being rewarded for taking that positional trade. So from the weekly perspective, it's hard not to want to be long basically at any price below 1489. 001489, 0.001489, and then looking to maybe sell or exit our position and wait to see if we get continuation or if we do get a strong bullish trend after the closure of that on the weekly time frame. On the daily, it's hard not to be bullish right now. Again, the PTP long signal did end up coming in over here on the night of the 9th. This was the candle that have opened the evening of the 9th and closed the evening of the 10th. So this signal came over the weekend. This was a Saturday evening signal. And yeah, good stuff. That's all I got. That's all I got. As always, I cannot actively recommend entering at this point in time right now, especially after price has appreciated. Again, same kind of setup. If we were wanting to look to enter off of this, the strategic area to enter would be between 001175 and 001112. 1112. Now, there is a potential that we don't end up getting filled, especially if price is going to make a little bit of a run. So if you're in an active position, I don't see an exit signal right now. I will leave the entries to you. You can, of course, go down to lower time frames, wait for pullbacks. Again, when price is in bullish territory, trading reversals within the dominant directional trend would be essentially trend following strategy, buying every dip, right? And I think NEO is in that fashion right here, which I couldn't be more pleased about, again, having a bag of NEO myself. 4-hour time frame has not given an exit signal yet. Nice little breakout to the upside. And 2-hour time frame is going to be giving an exit signal right now on the close of this candle, because again, Minx is slightly predictive and will often give us the cross under on an up candle and a crossover on a down candle, which is a nice thing. It's a nice little bonus. But again, the algorithm for this took a long time to code, so it better, darn it. So that's my thoughts on NEO, man. Let me know what you guys think in the chat. Uh, 100% Doge, I'm all in. The second coin, which I bought after Bitcoin from Kraken. Gavin Nielsen, good to meet a fellow algo trader, my good friend. It's Hard likes Doggy Coin. Ian says, Pundi X, baby, for the win. Alpine Whip says, the Neo Bitcoin swing trade has been a banger for me. Thank you, Danielle. Highly appreciated that, my friend. Evo says, oh, Justin, are your trading charts? I think I'm already using them, lol. I'm not sure what you mean by that, my friend. Satoshi Nakafomo, it has been a ride, my friend. We got some requests for IOST, Particl, and I want to answer Bras. Thank you so much, Love Crypto, and Nano. Gotcha. Let me check in real quick with my production team over here. Okay, we do got 2 news articles, which I want to make sure that I get to. So let's do that. Let me hop over into the news real quick, gentlemen, and then I believe I'm going to get tapped out with these requests. So let me make a note of this. So we've got Ian. I took a low-risk reversal baseline bounce trade on IOST BTC 2 days ago. Could you comment on what was wrong or right about it? Love to, my friend. And Mr. Marchampa, Particl, Partcoin. And bruh. Says, currently using the Fisher transform as my exit indicator, but I don't have an objective way to set targets and or take early profits. What should I test first? Learn, earn, and don't get burned, my friend. And Nano for Mr. Sidhu or Mrs. Sidhu. Don't want to assume your gender. Where's the cat coin I'd buy? Thank you so much, Edward Park. Highly appreciated. I believe that's over on Ethereum. It's called Crypto Kitties. Almost crashed the network. Okay. So our first story of the day, because I do want to touch these because I think it's important, obviously, for us always to stay aware of what's going on in the world. Something that we're going to talk about tomorrow, which concerns me, is Russia preparing this law to allow for cryptocurrency confiscation. But we'll talk more about this tomorrow because I want to gather my thoughts before I really comment on this. But fairly not happy about this, as you guys could imagine. But we're going to be talking about backed and institutional custody now being available to all, or excuse me, about backed Bitcoin custody in the backed warehouse being available now to all institutional clients and what this really means for adoption and where we're at. Let me make sure that everything is good. Cool. That is good as well. So we'll just scroll this down a little bit. Now, Backed has announced that their regulated and enterprise grade custody solution, which we've talked about before on this channel, which is the Backed Warehouse. Now, Backed Warehouse recently obtained approval from the New York Department of Financial Services. So the New York regulators, which opens up its custodial solutions to all their institutional clients. And this was published in a Medium article earlier. Today, their COO, Adam White, he did announce that the NYDFS, the New York Department of Financial Services, has given back the approval to begin offering this custody solution to all of the institutional clients who want to safeguard their Bitcoin holdings with the Backed Warehouse. Now, keep in mind, this is a third-party solution. This is not your keys, not your keys, not your coins, which we are a strong advocate of on this channel. But the potential for this cannot be understated. As we've seen Backed volume grow and grow and grow, and now with this institutional service being offered, this custodial solution being offered, because the biggest problem, the biggest hook for institutional investors or for any large wealth investors into cryptocurrency is custody. It's tricky for them. Most of these people are not tech savants. So prior to this approval from the NYDFS, the Backed Warehouse was only available as a custody solution to those who were actively trading Backed Bitcoin the Backed physically settled and physically delivered Bitcoin futures contracts on their platform, which, as we know, was launched earlier this year in September. With this latest approval, this custodial service is now available to clients around the world, not just in America, but around the world, seeking enterprise grade storage, which is, we have BitPay, we have other third-party custodial solutions, but this is Backed, guys. And this joins the likes of Coinbase and Fidelity in the emerging marketplace of institutional grade crypto custody products. Now, according to Mr. Gabor Gurbax, which is probably one of my favorite names under the earth of the sun, who is Van Eck, he praised Backed on the move, stating that this would help to encourage greater institutional adoption of Bitcoin. Recent studies have shown that institutional investment in Bitcoin is declining. So many are hanging their hopes on the development that these institutional grade financial products or custodial solutions will solve this kind of hanging point, as I said, and attract larger scale investors into Bitcoin, at least over the coming years. Again, very similar to Backed. When Backed launched, we saw no volume. You have to give these things time to happen. Again, investors move slowly. I move slowly. I accumulate positions of dividend stocks very, very slowly, and I hold them forever. I only buy quality. Now, back in September, the U.S. Securities and Exchange Commission highlighted custody as one of the major challenges of the crypto industry to overcome, just highlighting what we already knew. I like how these regulators already tell us what we already know. The ICE-backed exchange Backed and now custody offering is said to signal the entry of a trusted name, because they're sponsored and run by Backed, into the Bitcoin custody arena, which potentially might thaw the regulators' adversarial position on this relatively new industry. So that's kind of the positive thing that we're looking for. We've talked about what are the two options for Bitcoin over the coming years. Well, it really depends on what governments decide to do, and it really depends on the big battle between central bank digital assets and corporate coins. Either way. Now, this lack of trusted custody was one of the reasons cited by the SEC for refusing to approve the previous Bitcoin ETF, following which they have continued to smack down over and over and over and over again, like a Telegram signals group going for a pump and dump with only 50 members. Now, as the custody solutions continue to mature, obviously being led by bigger players like Bakkt, like Fidelity, like Coinbase, the hope is that both institutions and regulators will grow to trust and be more comfortable working within this space, which again, some people like, some people don't. But overall, if you're interested in price, if you're interested in investment, you do want. These are necessary things to happen. Now, for Bakkt, the goal is to quickly onboard institutional players onto its custody platform. What does that mean? You're already holding Bitcoin with us. How about opening up a long position with 2x margin on our physically delivered Bitcoin futures platform? Hey, hey, hey. According to the announcement, Galaxy Digital, aka Mike Novogratz, as well as VC firm Pantera Capital and crypto brokerage company Tagomi are already using the Bakkt warehouse. Now, according to White, COO of Bakkt, the trick is in leveraging the status of its parent company, the Intercontinental Exchange, to attract more marquee clients, so glamour clients. You're like, oh man, you should totally come warehouse your Bitcoin with us. We've got Galaxy Digital, we've got Tagomi, we've got, so on and so forth. Now, White also revealed that the company has taken every step in precaution to ensure robust security for the custody platform, including biometrically controlled bank-grade vaults and round-the-clock video surveillance. I already get that with my Google Pixel 4. Come on, guys, get with the program. So what do you guys think about this? Do you guys think this is just more of the Bitcoin please go to moon, ETF please save us sir type news, or do you guys think that this is legitimately foundational kind of movement in moving closer and closer and closer to getting the institutions are coming meme to actually come to life? I'd be interested to hear what you have to say. And while you guys are thinking about the comments, I do kind of want to run into what I think is a little bit more important in our last kind of segment of the day, which is, of course, about China. Just one moment. Got it. And going over to China, the Chinese, which of course we have to understand that news is a little different in China. Their news agencies are state run, so they only publish what the government wants you to see. You got to go to the internet, hopefully, to get what you don't. Good luck with the great big red firewall. Now, the Chinese news state agency, I'm pretty good at pronunciation. We're going to give it a shot. Xinhua published a front page editorial today about Bitcoin titled Bitcoin, the first successful application of blockchain technology. And this surprisingly had a balanced take on everyone's beloved coin. Now, until recently, much of the leading coverage of the crypto space by mainstream Chinese media has primarily focused on blockchain. So the whole blockchain, not Bitcoin meme, which of course is Bitcoin's underlying technology rather than Bitcoin itself. Now, many Chinese-centric and high-profile stories have trended in crypto land in recent weeks, between President Xi Jinping's comments on embracing blockchain technology and state news outlet The People's Daily recently calling blockchain a breaking point for the country to overtake the global lead. This latest development puts Bitcoin itself as a cryptocurrency front and center for millions of Chinese and global readers. Now, in Xinhua's, hopefully I'm pronouncing that right, front page article, Bitcoin is given a detailed explanation of how it operates, describing both positive attributes as well as some critiques of the original decentralized cryptocurrency, leading some to wonder if this is the beginning of a significant shift in official Chinese government policy towards our leading cryptocurrency. Now, along with last week's news of China's Economic Central Planning Bureau delisting crypto mining as an industry to be eliminated, some are now going so far as to speculate that China could be considering lifting its ban on Bitcoin trading, which of course dates all the way back to September of 2017 when price started skyrocketing. They're like, whoa, 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 whoa. If anybody's going to be making money around here, it's going to be the state. Stop it. Too much. Now, in the article, among some of the listings of Bitcoin's negative aspects detailed in the article, it includes a critique of the energy-intensive nature of its mining, suggestion of a problem of centralization, as well as the volatility of Bitcoin's price. It goes on to claim that the key uses for Bitcoin are black market transactions and money laundering. So, unfortunately, it's not all good news because they're just toting the same old dog and pony line that Bitcoin is mostly a use case for criminals, which we know objectively to not be the fact. Now, overall, however, many do feel that this is related to a new propaganda campaign, which is designed to set the stage for the imminent arrival of China's new cryptocurrency, dubbed the Digital Currency Electronic Payment, or DCEP, which is a central bank issued digital asset. So according to Matthew Graham, chief executive of Beijing-based Sino Global Capital, in comments made to Decrypt, China's recent state media offensive about blockchain technology, including today's article, is all part of a top-down effort to, quote, shape the narrative surrounding this powerful and strategic technology. He says they cannot ignore Bitcoin, but they don't really want to encourage it either. They want to slowly push and pull people in the direction of their own vision. What is that vision? State-controlled DCEP in conjunction with blockchain technology throughout the economy. Again, we talked about the dangers of this on Friday in regards to Europe's central bank digital asset, and we talked about this at length last week, so make sure to go check out last week's videos where we talked about the danger that China's central bank digital asset poses to individuals because you are investing the powerful technology of blockchain technology and the transparent ledger and repealing cash and replacing and basically mandating that everybody uses your transparent ledger that is monitored and controlled by the state, by a central authority. Not decentralized, not distributed, centrally maintained, private digital ledger. Again, we already have in China, if you try to jaywalk in China, in certain cities, a picture of you flashes up on a big bulletin board with all of your personal identification. And now we are talking about investing the state of a communist nation that is known to silence dissidents with all the surveillance power that blockchain utilized incorrectly can offer them. And that terrifies me. And I hope it terrifies you too. So let me know what you guys think. And let me know what you guys think we can do about it. With that being said, back to the charts. Let me grab the most recent comments here. Mad Rock says, hey, Justin, what's your opinion on going back to 1K? It would take a government mandate to do that at this point in time. Do I think that Tezos was a blow off top, or maybe we continue because of Coinbase? You know, I know that Alex has us in a Tezos position. He has a firmer beat on this. I don't want to at the risk of not getting to the other request before the end of the show, I do want to point out that Tezos is not qualifying for a long trade right here. And unfortunately, with that 30-period Donchian, we are kind of forced to switch over to the 13-period exponential moving average. We do have to say that Tezos, obviously, yes, was a massive blow-off top and wick. Here on Coinbase, we could see we just massively appreciated. There was a massive influx of buying as a feeding frenzy. I do not see price immediately continuing to the upside. I have to reserve judgment and wait on Tezos to see what the reaction looks like off of the baseline. We do have a lot of good things here on the daily time frame on the XTZ USD pair. We have not only a fully fledged long signal, which came over here. Actually, excuse me. The fully fledged long signal came using the 13 exponential moving average user baseline, came in right around here. Anywhere in this area, you would have been getting a long signal here or here. You actually crossed the 55 here. So there's really no excuse to not have, if you were actively looking for a setup, I can understand you missing the trade because you weren't monitoring XTZ USD. That's fine. You do want to get comfortable with your group of markets that you're actively trading. But if you were watching XTZ for a long trade, there was nothing to justify not taking a position here. And then what did you get? You got just a massive valuation. Even if you would have sold the daily close, you would have still came out like a bandit. Now, what do we see? Price mostly losing its steam, losing its luster over a little bit of time. I would expect to see price pull back to at least $1.06 here, maybe $1.07 at the high point. So $1.06.77 here. That's where the 13 exponential moving average is here, because we cannot reliably use the 30-period Donchian unless we scrub the outlier out, which I'm just not set up to do right now with the Donchian, with the indicator that I have for the live stream. And then we can kind of make a decision. We can take a reversal baseline bounce. We can watch for a continuation trade. We got the exit signal from Minx on an up candle right over here on the 9th of November 2019 on the daily time frame. So I want to reserve judgment until it's very clear and objective. Either we get a continuation signal and we continue to take price to the upside, or price pulls down to the baseline and we look to get into a reversal bounce. And if price closes below the baseline, we exit. But again, we don't have enough historical price data here on this chart to look at the weekly and look for the weekly crossovers because we don't have 55 weeks of price data here. But on the daily, we do have that 1355 exponential moving average crossover, which typically lets us know that we are entering into a bullish trend. So looking for a pullback around $1.06. Again, we might dip all the way down to the secondary baseline in the form of the 55 exponential moving average, which is coming in at 98 cents. So I could see price going back to $1, and we can kind of make our decision from there. From right now, I would most likely stay away from Tether unless we get a very clear and strong continuation signal, and then it would be a valid trade to take again. Is there any way to get the stats on long versus shorts on backed? To the best of my knowledge, they're not releasing that data at this point in time. Shut it down. Shut it all down. Jay Tobias asks, this isn't one of those overly bullish XRP channels, is it? I can safely say no. In fact, we do have live footage of the XRP order book. Let's check it out. All right, a lot of comments, guys. Trying to keep up the best that I can. I do want to say, and I'm sorry that I didn't put this in the title. Call it what you will. I am proud of my nation, and I do want to give a huge shout out. This is Veterans Day, so I do want to give a big shout out to any veterans watching, any veterans who might watch again. I don't take this. I know a lot of people are like, oh, I hate to say this. I don't. Thank you for your service. I highly appreciate it. If you're around, today's for you, man. I come from a family that's done a lot of military service. So, my heart goes out to you. It takes a lot of courage. Doesn't matter what your feelings about the state or the government are. It matters the men and women and citizens that you're standing up to defend and protect. So my heart goes out to you, and my hat's off to you, gentlemen. Thank you very much. And whatever nation you happen to be serving, and whatever place you happen to be standing, because there are two types of people in the world. We talk about this a lot. Don't like dualities, don't like binary decisions. But in general, there are two types of men in this world. And not saying that only men can serve, I'm just saying there are two types of people in this world. There are people who stand up to defend the people that they love, and the people that are waiting for somebody else to stand up and defend the people that they love. There's the person that jumps in front of the bullet that's flying at their child, and then there's the person that pushes their child in front of the bullet or is too scared to do anything. So it's very hard to have a society without those people. And I don't think you guys get enough appreciation, especially in our modern society where being brave, being strong, standing up, being tall, being proud of who you are is shunned, especially if you happen to be of a particular gender. So kudos to you guys. All right, now to the requests, guys. To the requests. Hodl gang, hodl gang, hodl gang. Okay, so Mr. Ian Cortor, he took a reversal baseline bounce on IOST to BTC 2 days ago. What did you do right? What did you do wrong? Let's go take a look. Okay, so we've got a 30-period Donchian here. We're going to be utilizing the 30-period Donchian for the purposes of this. If you're using a different baseline, that's fine. I'm not going to try and hone in on your exact price levels or where you actually committed the entry or exit. And we're just going to focus on kind of where we're at and what the setup would look like. IOST BTC, let's see here. Would have given us a long signal on this candle right here. And let's see if we would have grabbed some profit. Looks like not. Looks like we kind of gotten swept around on the daily by IOST. Maybe. We got to pull up the data window. TP1 would have been 80 sats. We would have hit TP1 right on the nose. 80 sats was the high of that candle. We would have gotten filled at TP1. Would have been out at break even on the close of this candle right here. So that was a profitable trade. We got a profitable trade on the daily from IOST. Now we know that we are potentially bullish, so we need to wait. Of course, we're above the qualifying line here, so we're not looking for any trades. Looking to get back into that buy zone between the qualifying line and the baseline. Potentially, this isn't really PTP, but I do know some people that do this. They're basically like, once we get a nice bullish price appreciation, or they think we're bullish on the higher time frames. Typically, there is a little bit of like EMA strategy that goes with here, so you can see. You can see that 1355 moving average crossover. We just talked about this in regards to Tezos. So typically when we see something like that, I know a lot of traders are going to be buying up anything that comes back within that qualifying line, which is fine. Just test for it. Make sure that you have a systems approach to it. But anyways, potentially you could have bought up this candle. If you would have had an entry here, you would not have grabbed any profit at all. That trade would have been a losing trade. Essentially using the qualifying line as your baseline right there is another way to look at that. So instead of using the baseline as the baseline for reversal baseline bounces, what about using the qualifying line, right? Think about that. But you do get a beautiful reversal baseline bounce on this candle right here. So if you would have gotten filled here or anywhere in this vicinity, I think you're doing okay. The only thing, now of course, we're going to be using most likely different indicators right here. But on my system, I need to be out of longs. Like Minx is telling me to not be in longs, right? Not only did I get the exit signal over here, I got the exit signal to be out of a long on this candle with the cross under on Minx. But also we've gone below the zero line now. Now, commodity channel index is still above the zero line. So we can still potentially be looking for longs. But we need to get a good continuation signal for Minx. Now, if we get a continuation signal for Minx, I think this would be a qualifying trade to the upside. We don't need our volatility filter to give us a signal because we have not closed below the baseline, so we can take price to the upside. There's no problem here. We don't need volume or volatility to continue to take price to the upside. Overall, I think you did good, man. I think you did good. Again, as I just went off on my rant about individual trades, there's no guarantee whether this will be the profitable trade or whether this will be the break even or the small loss. We can't know ahead of time until the trade's concluded, until the market does what the market's going to do. But the entry was good. The entry was strategic. We have had 3 days of consolidation. I know this can be like difficult to sit here and watch an asset go sideways for 3 days, especially if it starts listing lazily to the downside, or if you're in a little bit of profit, or maybe you're in an unprofitable position. But overall, I don't see anything that unqualifies. Now, you need to take a look at your initiator, whatever your primary indicator is, and you need to know whether or not it's giving you an exit signal. If it is giving you an exit signal, you need to get out of the position because that is going to be going against your strategy if you hold stubbornly a position open in spite of your trading system. Other than that, I don't see anything wrong with this. Good job, man. Good job. That doesn't mean you're going to win on this trade, but I see the entry. It was strategic. It was well placed. Good baseline, good reversal baseline bounce, trading in the direction of the dominant trend. Good on you, man. Peckham says, sorry, I had to see a man about a dog. What did I miss? Did I miss Moon? No, not yet, sir. No, not Moon quite yet. A little bit of listing lazily to the upside. Shoot, I'm out of water. You guys are running me dry. Dehydration. Mar Champa would like to take a look at part. That is going to be on Mr. Bittrex. And I do just want to say, had a fantastic sit down with the team at Particl. Full disclosure, I do not own any Particl token. I do really, really, really like the team members. We had a lot of fun, became fast friends. And so I just want to put that out there. I'm going to be completely objective about the structure of their price chart as possible. I don't have a position in Particl, but just want to throw that out there. I like the guys. They're a good. They're a good team, and they work really, really hard. But again, token economics. So Particl's been around for quite a while. Got listed on Bittrex. So let's look at where we're at. From the weekly time frame, again, we'll talk about that perspective. If you're looking for a token to invest in, all we can garner from the weekly, from the monthly is price is quite low. Particl is something that has been around through a few cycles, and we can see that it does show the potential benefits of being an oscillator. But down to the daily time frame, very clean, very objective. Same thing with any other token. Long signal right here. See if that would have been a winner. Nope. That's a losing trade. Long signal right here, which is another winner. So two small losses. And then here, you can get the re-entry. And you crush it. All TP3s on that trade. Beautiful trade on Particl. You are in bullish territory. You are above the baseline. You are within the buy zone right now, below the trade qualifying line. Baseline coming in at 000-14097 would be the reversal baseline bounce setup on Particl. We do not have a continuation trade at this point in time. The setup that I can see is if you do want to begin DCAing or scale into your position between current price and 14097, that would be the way to scale into a reversal baseline bounce. For the premium members, make sure to go view the scale in, scale out video, which is in the BitMEX tutorial, as well as obviously being familiar with reversal baseline bounces from PTP. Commodity channel index is above zero, so we are in bullish territory. We do not have an objective continuation signal right now. The only thing on the table is, as we are within the qualifying zone for trade entries, you could scale into a long trade from current price down to the baseline at 14097, setting yourself up for a scaled in reversal baseline bounce, or waiting for a continuation signal. Remember, as we are looking for a continuation signal at this point in time on Particl, you don't need volatility filter, and you do not need to be within the trade qualifying line. You are free to take trades above the trade qualifying line. But this is pretty clear and objective. This is a pretty clear and objective chart. Once we made the transition from bearish cycle to price appreciation, unfortunately, we had a little bit of chop, had to take two small losses before we got a nice good winner, and we are looking like we are setting up for a winning trade. Even Satoshi said XRP is an interesting project. Doesn't mean it's a good one, though. Now that we have the XLM fork of XRP, I would argue, what's the better project out there? To the next one, Bra says, so Bra is currently using the Fisher transform as his exit indicator, but he doesn't have a way to set objective take profits. So at the risk of not shilling my own project, which I do, we do fully go over this in the PTP course, premium.crackingcryptocurrency.com. We utilize Quadriga ATR as our objective stop and target system. It is the same for every trade. It is clean. It is objective. It works just as functioned. All premium members get access to all of our proprietary indicators while they are members. So, that is definitely something to consider. But what I would recommend is you have two choices. And this can be a little tricky when we talk about stop and target systems. You can either use subjective take profit targets. These are going to be trend lines. These are going to be price targets. These are going to be order blocks. These are going to be previous highs. These are going to be Fibonacci retracements, right? So you have that. Or you can use something that's objective and clean every single time, like the average true range indicator and multiples of the average true range indicator at every single daily candle close. That is what I utilize. That is what I recommend. So that you're always consistently taking your profits based off of current volatility. If volatility is quite high, you would expect you don't want to be taking price at a low level of volatility. If volatility is quite low, then you don't want to be setting grandiose long-term take profit targets. The other thing that you can do is You can use something that's a little bit more popular with systems traders. What I do is a little bit different, but you can do something like I'm always looking for 3% per trade, right? And you can use ATR volatility for this as well. ATR is great for volatility. We have that in Quadriga ATR. You can find this indicator, of course, on TradingView. But you can say, I'm always looking for 2%, or I'm always looking for 4%, or I'm always looking for 6%. The problem with that is that you have to look at, is that is static, and that's not looking at the volatility of the asset at any given point in time. And the volatility changes over time, and the volatility of assets to asset is going to be different. So I like looking at ATR. It's an objective measurement of volatility, and I think is the best foundation for setting for setting our stop and target system. But whatever you do, I would highly recommend that you make it objective and repeatable and consistent over time, and not subjective. Don't use Fibonacci extensions. Don't use trend lines. Don't use previous highs. Only as general markers in general territory. That's fine. You can add those to add a little bit of nuance, but you want to have your go-to be an objective take profit strategy. But the Fisher transform is a good exit indicator. So shout out to you on that, my friend. And then the final request is going to be for NANO from Nad Situ. So let's go look at NANO. The coin of choice for receiving payment in Venezuela. Again, this is a fairly clean and objective altcoin chart. Long signal right here on the 5th of November, 2019. And looks like you just did take profit 3. Now, by all rights, you most likely should have exited right here. You did get an exit signal on this candle. Now, with an exit signal, you should just be out of the trade. I know some people who will utilize that, obviously, to move their stop loss up. That this would have been an opportunity, and I don't want you guys to get the idea that, oh, you take an exit signal and you're always going to miss out on the pump. 9 times out of 10, you take an exit signal and you miss the dump, which is what you want. And that's what exit indicators are there to do for you. But yeah, you would have missed out on TP3 for this particular trade. Looks like you would have already hit TP2 on the first, on the very next candle. So this would have been a very quick one-day trade on NANO. Good. We don't have a re-entry signal on NANO as we speak right now. We do have a fairly interesting order block coming in right here. If I'm looking for kind of resistance, and I am going to pull up VPVR to see if I can get any confluence with that. So let's just look at our current accumulation level. Yeah, so we are trading above the point of control. We have our most significant level of resistance coming in quite high above us at around 1,400 sats, 1410 to 1423 sats. So we do, in a positive or in an optimistic point of view, have quite a bit of room to run, about 20% more of price appreciation to the upside. We are at a high volume node right now, struggling to get over that a little bit. This has been previous resistance in the past that we've blown through and turned this into somewhat of a bearish breaker. Now we're trying to convert this into a bullish breaker. I don't see a lot holding us back from a 20% movement to the upside, but I would be hesitant on entering into position now. Subjectively, not listening to exit indicators or anything like that, non-PTP, I would probably close this position out right now, not only because PTP tells me to do, but it does look a little overextended. I would wait for a little bit of a pullback back within the buy zone here between 1033 and 1102, so about 100 sat variance range right there, a degree of confidence, and then look to re-enter in the direction of the dominant trend, reversal baseline bounce type trade, reversal in direction of the dominant trend, and take price up to those targets. Because I don't see an objective entry signal right now. And again, that's quite a bit of volume coming in on the 12-hour time frame. That's a lot of sell pressure that's coming in right now. So we've seen candle structure like this just continue to run. But I'm always hesitant. I'm always cautious. I always prefer to not lose money rather than gain money, because that's how you consistently make money and lock in your capital, month after month after month after month after month. And Wally, I'm so sorry, man. You throw that $20, man. I didn't even look at GBTC for you. I'm such a terrible friend. Now, GBTC, on the other hand, if we're looking at GBTC as a leading indicator, Grayscale has sometimes acted as a leading indicator. This is a little bullish, man. We got a nice dip down to the baseline. We didn't quite touch the baseline, coming down at 10.18.5, but we did come very, very close to touching it. And what did we get? We got bullish appreciation back above the qualifying line. We dipped right into the trade qualifying line, giving us an opportunity to pick up longs, and now we are appreciating to the upside. Commodity channel index held strong above zero. Looking at Minx is crossing below the zero line on this candle. We did get the exit signal over here on the first rejection candle, keeping us out of this down movement to the downside. Volatility filter is still rising. So we are, again, on GBTC, we are in bullish territory. And basically, this is exactly what I was talking about right now. Not quite the same because NANO was actually running to the upside. This is more like IOST, where we have a qualifying trade. We're within the trade qualifying zone. We enter, price runs long, we get the exit signal on this candle, and price comes back within the trade qualifying line, very close to the reversal baseline, or excuse me, to the baseline for a reversal baseline bounce setup, and we do get a little bit of bullish price appreciation from there. Heikinashi is still red. I would feel unconfident entering this trade. I wouldn't take the GBTC long. But if we get another up candle, it's possible that we can get another long signal on GBTC, a continuation trade, which I would view as a bullish sign for Bitcoin. So this actually looks quite healthy. This chart looks very constructive. We do have a pullback. And again, the deterministic factor comes, this is invalidated if we close below 10.185, which is the baseline. And again, Minx has already gone short. If we close below that baseline, commodity channel index will also go short. And I think we'll probably be set up for a full risk short trade on Bitcoin, which is what I'm kind of looking at right now if all things go to the hilt. But as it sits right now, this has the potential to be good. And I think this kind of fits very, very nicely with my personal trading strategy of what I'm going to be doing this evening, as long as nothing significantly changes on the chart, which is taking a split position, long and short, and dropping the loser on tomorrow's daily close. I think that's the right way to go about doing it. So good find, good eye, and good on you, man. Learn, earn, and don't get burned, my brother. Now, we are getting very, very close to the end of our show, guys. So let's just review the chat, my friend. Nav, thank you so much for the request, my friend. You know, Caveman, I do have a thought on that. Crypto Caveman is talking about the indicators, and basically the question here is, what indicators should one base their strategy on? You know, a lot of traders that come into the group, I think the best performers, obviously, we've seen them kind of make that role from coming into the group, learning, putting their head down, doing all the work that they're supposed to do, and then the ones that perform the best end up becoming analysts. The reality is, Minx is a really powerful indicator. The indicators that I created for a reason. And they are really there to help you guys out to the best of your ability. We have, again, we've mentioned this. We have a lot of stuff going on. We have considered licensing our indicators essentially for non-premium members. It's just not something that we're set up to do right now, or that I don't want to say there's not a lot of demand for it, because that's actually not true. There is a lot of demand for it. We just have other priorities at this point in time. So potentially that might change in the future. We are a growing company and things are subject to change insofar as that goes. So we appreciate your patience. But, you know, this is kind of a known. So when you come in, you can utilize, the PTP strategy, one of my PTP strategies is handed to you and taught to you how to work. And then the challenge, or really the coursework, is designed to teach you to build your own strategy from scratch. And then as we're going to be going through the Pine development course, you're going to learn to build your own indicators as well. So this is obviously going to be something that's a little catered to. Here's the thing, guys. I'm not a naturally gifted programmer, and I created Minx. And I think that's possible for each and every one of you who just sit down, buckle down, and make this their serious profession and job and put the time and effort into it. But there's a lot of fantastic indicators out there, man. I'm utilizing commodity channel index on stream. It's a stock indicator on TradingView, and it works really, really, really well. So I think there's a lot of ways that we can get around that. But again, I think maybe the The one thing there is potentially licensing the indicators in the future, which is something we've definitely considered. But I don't have a strong answer on that right now. I'm sorry, my friend. Chris Post says this whole market is bot driven or TA people would be rich. I mean, I can't speak for other TA people, man. I think 99% of the TA chartists or whatever you want to call them out there are not systems traders. I'm a systems trader, and we're doing really well, man. So I don't know. Technical analysis doesn't predict the future. Technical analysis works in the form, if it provides objective trading signals, then that's what technical analysis is designed to do. Because otherwise, how else are you buying? How else do you know when to buy and sell? When you feel like it, when your favorite analyst tells you he's bullish, when the moon is full, like I don't know. I can't conceive of any other way to trade than using indicators to get objective signals, because there's no other element of price, there's no other data set on the chart that is either yes or no, true or false, if this then that. And that's how we trade. And yeah, there's a lot of bots in the market, there's a lot of whales in the market. These are all known knowns, man. And the reality is that, I mean, there are there's hundreds of thousands of traders out there in the active market that are making money despite all the market's bot driven, no way to make any money, TA doesn't work. Well, say that to the profitable traders, man. Like, I don't know what to tell you, my brother. Like, if you think that technical analysis can predict the future, I just went on a long rant about that. It doesn't. There's no future prediction. Every single individual trade is a 50-50 chance. It's a coin toss. It's a crapshoot. But a series of trades with a systems trading approach is a data set, is the statistic that you can control for profitability. It just takes work and discipline, my friend. Is there any gaps we need to fill this week? Before I answer that real quick, Jimmy Flores, what kind of indicators do I use that tell me that it's time to sell? I'm trying to get better. Just need more advice. Thanks. Well, thank you for the support, man. And thank you for the question. So I utilize Minx is my entry and exit indicator. It works really, really well. I would recommend using Fisher Transform. I kind of point a lot of people at Fisher Transform. Fisher Transform is the algo that this was based off of. I hate to recommend it, but it's actually not too bad for beginners. Like the stochastic RSI as an exit indicator is pretty good. It's not terrible. It's not great, but it's not bad. It's not bad. It's a good place to start, my friend. Line crossing indicators are often really, really good as exit indicators. I often almost exclusively use line cross indicators. Or Heikinashi. Throw up Heikinashi on your chart. When the bar turns the opposite color, Heikinashi, exit the trade. It's pretty good exit indicators. Those are good places to start, my friend. Thank you, Scott, for putting the words in my mouth. Maybe a better answer to what I said. So our proprietary indicators are a core essential part of our Pathways to Profit strategy that teaches you how to make your own profitable strategy. Right now, we are an educational training company with a free weekday podcast of our show, as well as a free Discord community with over 4,000 members. We also have a premium mastermind group and different tiers of premium that come with third-party and in-house webinars, helpful trading strategy rules, as well as helpful trading strategy tools. Part of these tools are the indicators, as well as risk management proprietary spreadsheets for making sure that you are at a minimum not losing money. We are a group that focuses highly on risk management and retaining capital. We believe that if you can retain your capital, you have a longer ability to play this game. If you don't have a smart risk management strategy, we all know how hard it is to come back from a big loss when you have less of a trading portfolio to make larger profitable comebacks. Due to us really leaning on an educational community, man, you just keep coming with them, man. Due to us really leaning providing an educational community where we want to acquire some of the best trading minds that we have met so far, we believe that having access to the indicators should come with the premium group. If we were to charge for the indicators and you wanted to get help about them, where would we talk about it and assist you? It would have to be in the DM or a free chat channel. And then that kind of doesn't make sense. Or we would have to charge a higher fee for the indicator, because I think there's an abundance of supply and demand there. So that's really good comment, Scott. Thank you very much, man. Thank you for putting the words in my mouth. in a better way. As far as gaps to fill, let's go check out the CME. I don't think so. GBTC filled this gap right here. You know, it depends on how wackadoodle you want to get. Here's a gap here. You know, here's a gap that we are probably going to fill up to 10.9304, which would suggest a little bit more upside for Bitcoin today. As I kind of said intraday, I expect price to list lays to the upside with a heavy dose of accumulate or reaccumulation. Oh, what am I doing? I have it bookmarked over here. Gaps in the CME. No, not really. I mean, we filled the major gap. The only other gap, which has already been filled almost immediately, is down here. And that's so no. We good, fam. And with that being said, guys, thank you to all. There's almost 1,000 of you guys watching. So I'm very, very humbled by that. Very appreciative. But as we do every single day, all good things must come to an end. Hey guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise. I am the lead analyst and co-founder at crackingcryptocurrency.com. I hope you guys have an absolutely fantastic day. If your goal is to be a full-time professional trader, earn passive income on the side, or just take control of your portfolio so that you can begin on the path toward financial freedom, please join us and the rest of the guys in the premium group. It is listed above, premium.crackingcryptocurrency.com. There's a full description of everything that you get with that membership on the website, which is where the link takes you, incidentally. It has come to my attention that some of you are new, aspiring, or experienced traders. Regardless of what you do, make sure to hop in our Discord community. We have over 4,000 members in there, and it's the best place to be. It is where it's where I spend almost all my time. Discord.crackingcryptocurrency.com. Link in the description will bring you right to there as well to engage with our community, to see where we're trading, to see what we do. We do provide some signals and setups as well as market analysis. But overall, it is about the community and a place for traders to gather and communicate and talk about what we do, talk shop. So please join us in the free Discord community. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below. And we would highly appreciate it if whatever platform you're watching on, you show us some love. If you're watching on YouTube, give us a thumbs up. Also subscribe. The bell icon will make sure you know when we're live every single day at 12 Central Standard Time. The YouTube algo doesn't really like cryptocurrency, so we do our best in spite of that. And obviously with all the amazing support, we can see that today. If you're over on Twitch or DLive, make sure to give the channel a follow. And we also appreciate any help that you guys can do over there as well. Everything also goes to making the channel and show better every single day. We are here every day, noon to 2 Central Standard Time. Hope you guys have a fantastic rest of your day. Trade safely, trade smart, and I will see you guys tomorrow, bright and early at noon Central Standard Time. Cheers, guys.